Well, we're just done with earnings season. What was your sense in terms of which sectors probably stood out to you this time round, and which ones would you bet on going forward based on what we saw this quarter?
So if you look at Nifty earnings growth, while though on reported basis is a very muted revenue, EBITDA and operating profit growth, but if you look at BSE 500, also BSE 100, and if you take out, generally what we do is that we take out banking, oil and gas, and ex Tata Motors, because there is a huge one-off, then the operating profit growth is very strong. It is after a long time, it is a 12% operating profit growth and 12% net profit growth. So that is the first important thing. So on a broader basis, the companies are doing better than what they were doing in probably last 2.5 years. In terms of the sectors, there are few sectors which are clearly winners. Private sector banks is one of them. Consumer, of course, continued very strong momentum. And interestingly, the industrial, I think probably it is the second or third quarter where they kept delivering. On selective basis, even software and pharma has done reasonably well. So these are the sectors which have done quite well in the third quarter. Of course, if you ask me what are the sectors which are kind of a negative, then auto was clearly one of the major disappointment. Power, telecom, they remains kind of non-performing for quite some time. But auto was a major disappointment, and there are many industries which are linked to auto. So entire auto ancillary, therefore, also reported a quite muted numbers.
Rajesh, what are your thoughts in terms of the consumption sector? In any case, I mean, if you're talking about the Jubilant Food Works, the Nestle's of the world, the ITCs, which one would you approach and how?
So I think this sector will continue to do well, at least for next 1.5 to 3 years, because one is, of course, the government has also pushed from the budget perspective a lot of stimulus. So there is a very wide section of the population, 15 crore individuals. It means about 60 crore total population, households perspective. So 15 crore households, that's a very big number. So I think consumption will keep doing well, and of course we are holding in our portfolio, Titans, Asian Paints, Britannia's. So of course we are positive on this company, but in general this sector should do reasonably well.
Rajesh, ICICI Securities, I mean, since we're talking about earnings gone by, they said that after third quarter earnings, their earnings estimates for Nifty 50 has been brought down by about 6%. Cumulative earnings downgrades so far for FY19 is about 13, 14, almost 14% basically, and this is just Nifty 50. What do you make of it? I mean, and what does it do to hopes of earnings pick up, and of course valuations?
You are absolutely right. So at the beginning of FY19, I think street consensus was about 18 to 20% earnings growth for FY19, and now it stands revised downward to 9 to 11%, depending upon which broking outfit you refer to. So one is, of course, there are a lot of one-offs. As I'm saying, for example, Tata Motors. There is a huge one-off. So if you include all these one-offs, then this is what is the reported number. But if you take out,
The problem with taking out one-offs is if you keep taking out one-offs, very soon we'll be looking at 10 companies, not 50 companies. Right?
No, I'm talking about BSE 100.
Right.
I'm talking about BSE 500. You can take the entire universe. There are about 4,000 companies which are listed in India. You can take the entire universe. And banking, we always take it out because there are always both side one-off. There is a huge exceptional gain if there is a provision reversal, or huge one-time mark-to-market. Am I right? Similarly, in oil and gas, there are huge inventory gains or inventory losses. So we always take it out for our own study, normally speaking, for last so many years. So if you take that out, and one-off, like, at times you have a 5,000 crore, 10,000 crore, huge losses, it is not, if you want to see underlying strength of economy and underlying strength of Indian corporate Inc., correct? That's what one should refer to. And that is a 12% reported profit growth in third quarter. So I believe that FY19 will see 10, 12, 13% earnings growth on such basis. Reported number can be lower. And FY20 we continue to expect on aggregate basis 12 to 15%. Of course, interestingly, you need to identify then the companies which can grow 15, 18, 20%. Correct? So in India there are 5,000 listed companies, close to that. After that there are only 550 companies which reports 100 crores plus annual net profit. Only 550 companies. So what is important is how these 550 companies are going to do. And if they can grow at 15, 18, 20%, that's where the winners lies.
And do you reckon there are lots of potential winners unappreciated right now in the broader market?
Yeah, absolutely right. And that is across sectors. It is not only one sector. One is, of course, private sector banking. Second is, selective NBFCs. Third is many companies within consumer. Fourth is cement probably now come out.
Private sector banks, which one?
So entire private sector banking, whether it is a...
No, I'm talking about extremely beaten down stocks in the broader market.
Earnings has nothing to do with whether it's beaten down or not, am I right? Earnings has its own journey, correct? So if you look at, for example, cement, it is completely beaten down. Now, cost per ton is going to reduce by 150 to 200 rupees in fourth quarter on QOQ.
So because you said private banks, nothing in private bank is beaten down, except maybe one
but
name.
the earnings growth, correct? I'm talking about right now earnings growth. I'm not talking about whether it's beaten down or not. Stocks which are beaten down, there are reasons, many of them have reasons why they are beaten down, correct? And stocks which are up, there are reasons why they are up. It is not without a reason, correct? So I'm talking about the earnings growth perspective. There are many companies which we can identify the winners.
But can you identify companies with strong earnings growth and low valuation? That's my point. That's the game, isn't it?
Okay. So, for example, within auto and auto ancillary space, you can identify many companies where you think the potential of earnings growth for next 2 years, because it is a structurally there is no problem, correct? There is continues to be a problem maybe for a quarter or two. But structurally is not a problem. In fact, with BS6 norms coming in, many auto ancillary companies are going to get benefit out of it. So earnings growth can be very strong, and the valuations have beaten down. Not only price, I'm talking about the valuations, which have beaten down significantly. Similarly, on select NBFC basis, there are companies which are getting probably at 10-year average valuations, but the underlying ROE remains around 17 to 18%, and NPAs are going to come down. They are already reducing.
You can't name names, can you, Rajesh?
You would not like to.
That's a pity. Otherwise, viewers don't get too much because
But there are some themes that you're looking at, right, Rajesh? For example, you have agrochemicals, which is coming up as something which you would be exploring. So tell us more about that. Which are the stocks that you would probably, or I know you can't talk stocks, but the kind of theme that you would probably be advising?
So within agrochemical sector, if you look at it, there are companies which are exposed to domestic, and there are companies which are exposed to international markets. If you look at third quarter and even for 9 months, there are companies which are very strong on CRAMS business, research-based kind of a business, and with a very strong distribution network, they have reported very strong numbers, and their guidance is also very, very strong. For example, one of the company which we are holding in our portfolio is Heikel. Again, very strong numbers. They are into both space, agrochemical as well as pharma. The other companies which have also delivered very strong numbers in the space, we may not be holding that, is like, for example, PI, United Phosphorus, Sharda Crop. All three companies have reported very strong numbers. But if you look at the domestic companies, which are focuses on domestic business, their numbers are not that as strong. Like, for example, Dhanuka and companies like that. So there is a difference between the business models, and international right now is doing well, and there is a good visibility as per the, if you look at the management commentary of these top 5 players, they are very, very positive.
And capital goods, you're seeing stronger order inflow. What was your takeaway from this quarter also, and which are the stocks you would probably be looking at?
So in capital goods, you have to track, one is of course the order book growth. So entire universe order book growth, I think, is 7 to 9% for third quarter, which is very healthy. And execution is picking up. And government spend, whether it is a railways, whether it is a transmission, whether it is a roads, that continues. So we are fairly positive on capital goods as a segment. Within that, we are holding L&T, of course. We are also holding, bearing companies like, for example, Timken. And we are also, holding companies which are, I would say, beneficiary of this capex, like, for example, 3M and Honeywells of the world. So on a very select basis, this sector is going to do reasonably well.
Okay. All right. We're going to leave it on that note. Rajesh, any disclosures you'd like to make?
No, the companies what we have discussed, we might be holding in our, for our PMS clients. And so kindly make a note of this.